26 minutes past the hour of 8 a.m. here on Church of Uganda Family TV. I hope you enjoyed that musical break where we played some enriching songs for you, even as we begin this new year, new week, and whatnot. But even as we begin the new year, we need to remember that we need to pay our taxes. It's one of those things that we need to do as much as possible this year. And today with me I have someone who is not new here, Miss Hafsa Seguya. Thank you so much for joining us again today.
You're welcome.
Happy New Year.
Happy New Year too.
How is the new year? What's the plan?
Definitely our plan is to do more sensitization, is to create more of awareness, is to see that these clients are up to date with their compliancy, they are up with their compliancy, and we can maximize revenue. Because at the end of it all, we are looking at maximizing revenue for central government services that we hope to be provided with by government. So ultimately, in whatever I do, I look at how best I could mobilize revenue.
Okay.
So ideally, we start the year in the same spirit.
Okay.
We do not want to fall short with our clients. We want to provide all the information available to see that you understand if you have a particular income. Are you aware that income is eligible to tax? Or are you aware your income is exempted? Depending. So that is the awareness we want to create, so that at the end of it all, you know that you expect to pay something at the end of the month, at the end of the 6 months, or at the end of the year, irrespective of what tax type that is.
Okay. One of the incomes that we get, for example, myself, is I get income from where I work.
Exactly.
Somewhere called employment. I get income from employment.
Exactly.
There is that thing called employment income that you people have.
Yes.
I don't know. What does it mean? Employment income.
Employment income is basically income that you get out of having been employed by an individual, by a company, by a corporate body. So it is basically that income that you agreed with your employer, that remuneration that comes in a repetitive manner. Say on monthly basis, it could come on weekly basis, but it's still employment.
It's still employment.
Exactly.
Is it, you've said either weekly or monthly. Most of us have what we like calling them side hustles.
Yes.
And we not necessarily, someone might think, well, me, I don't have a 8 to 5 job, but I do this side gig for, say, 2 hours every day, and they pay me weekly. Is that also taxable?
Yes, it's taxable, because by the time you call it a side gig, it implies there is somewhere where you spend more or less a whole day. And this one, you just come in for an hour or two and execute, then you go back. So ideally, what you earn on top of the employment income is taxed. And when we tax it, we look at it as secondary income. Because ideally, so employment could be the primary income, and the side gig is secondary employment or secondary income. So at the end of the day, we tax it, but the way we tax it kind of differs a bit, because when I'm looking at employment income, I'm basically looking at the pay as you earn, different schedules, different rates that apply to the different amounts that one earns. But when I look at a side gig, I basically look at what do you earn in that side gig. And I tax it at 30%. It's a flat rate. Yes.
So whatever I earn, even when it's not stable, let's say this week I've made 100,000, next week I've made 500.
Exactly. That is provided it's secondary income. I tax at 30%, irrespective of the pattern and the amount. But when it is the primary income, you're in employment, that is very clear. We look at the threshold. Because when we look at pay as you earn as a tax type, as you hear the word pay as you earn, the more you earn, the more you pay. So that is why we have a threshold of 235. So whatever exceeds 235 is where the taxman comes in to pick the excess and tax the excess. Yes, but if you don't, yes, per month. If you don't exceed that, then ideally it goes untaxed. But your employer needs to represent you in their return at the end of the month. That look here, I have about maybe 50 employees, and the 50, each of them earns like this. So those that do not earn above 235, automatically the system will return nil as tax. For those that earn above, depending on how much you earn, because we have different brackets. We have those that exceed 235 but don't exceed 335. Then those that exceed 335 but don't exceed 410. And those that exceed 410 but ideally do not exceed 10 million. So we have different brackets. The more you graduate in income, the more you give back to government in terms of taxes.
Awesome.
Yes.
One of the things that sometimes we are confused about is two issues. One, who is an employer and who is an employee? And then who is in charge of paying, for example, that particular tax? Is it my employer? Is it me who goes and registers and say, hey, they are giving me 1 million every month?
Yes.
Who is?
So let's start with an employer. An employer is this individual. It is this company that starts out an establishment. When I start out an establishment, say Family TV, I have set it up. So whoever set up Family TV, say maybe Church of Uganda, whatever it is, that is your employer. And that employer will come and say, I need these in the newsroom. I need these on air. I need an accountant. I need this. I need an auditor and all that. So all those are employees of this employer. They signed employment agreements or contract with the employer that this is what I will be doing. These are the duties therein, and this is what I expect to be paid. And if there are benefits that were clearly indicated, ideally they have to be paid to that person. But they constitute part of employment income. How? It's like your employer tells you, I'll be giving you a gross amount. I'll be paying you, for example, 500,000. But on top of the 500,000, I'll be giving you lunch allowance of this much, or maybe at about 150. I'll be giving you transport of 180. I'll be giving you accommodation of in cash, of maybe 300. So when this taxman comes, I will add the 500 and add on the 150, the 180, because those allowances are taxable. They are not exempted. Exactly.
I'm about to ask why are they taxable? I thought they're as if benefits for me.
Exactly, they are for you.
How are they?
Let me give you another scenario. In the event that your employer says, instead of giving you cash for say lunch, I won't give you a lunch allowance, but I will provide the lunch in kind. And when I provide the lunch in kind, I'm going to provide it on a wholesome basis that every employee has to take it. At the same time, you take the same food, in our terms would say at arm's length. It is provided to everybody. Then ideally I will not compute the price of the plate you eat and add it back. Because I know this has gone into your stomach, the food has been eaten. But when I give you the allowance, say lunch, how sure am I you'll eat lunch? When I give you medical, what if you don't get sick? What happens? But when I wake up and say, look here, we are signing a medical insurance contract, say with one of the service providers, that whenever you get sick, take this card. They are going to do their work, examine you, treat you, sign, you have been treated, off you go. That means you haven't touched any money. You have just consumed the service. They've given you the tablets, they've given you whatever treatment you need. So for that, it is not, we don't tax it. It is the employer who has to get that cost of medical, the cost of the meals, and deduct it when they are pushing in their income tax return. But when I wake up in the morning and start giving you cash, all that cash has to be added up. It will constitute your employment income. Then I will see what bracket you fall in and tax you accordingly. But when we go back to pay as you earn, the way you explain, the way you are, the question you posed, who pays it? It is you, the employee, who pays it. How? We wake up in the morning and your employer says, yes, you're starting to work. Say 1st of January 2020, yes, you started working. But at the end of the month, according to the employment contract you signed, this is what I have to pay you. But it has to be subjected to tax.
True. So,
and what happens? We only have 2 deductions that do not suffer tax at that particular time. We have the local service tax. You deduct it before we can compute the pay as you earn.
Okay.
Then NSSF, it's deducted before my computations come in, so that you can save the right amount in the fund.
But I thought it was actually the employer, because for me it tells me, Byron, I'm going to pay 1 million, but net will go down to, let's say, 800 something thousand.
Auntie, why the reason why you call it net? Because I'll have deducted all this data. Then at the end of the day, that's what we give you. And when we give you that at the end of the day, if it has suffered tax, it implies that your employer has deducted it, because the employer has the obligation, first of all, to register that, you know, I have people I employ. Your employer is not supposed to register for pay as you earn. Okay. Your employer is supposed to withhold the right amount before you are paid at the end of each period, say a month or a week, whatever you agreed, but the most common is a month. They are supposed to withhold what is equivalent of pay as you earn, then push it to URA by the 15th day of the following month. Because the employer has to withhold NSSF, has to withhold local service tax, send it in the first 4 months of the financial year, send it to wherever it has to go. If it's in Kampala, they have to send it to KCCA. If it's outside Kampala, it's to local government in the municipal councils. They manage it. Then URA, we manage the taxes, the pay as you earn. So your work is to just avail yourself for work. Then the employer has to deduct before payment. Then they have to push it to URA by the 15th day of the following month. Because the reason why we do like that, ideally, we know most of the employers are paying a salary on a monthly basis. So we give them up to the 30th to make sure at least by that time they'll have paid whatever has to be paid. So that's why the 15 days in the following period are given to wrap up everything, put everything together, then submit to URA. And as you submit the return, please make the payment. Because ideally you've deducted from Byron, from Jen, from Harriet, from Brenda, from Joseph. So that means that the money is there. So please push it in before it could get lost in your other activities.
And an employer might argue and say, but for me, I don't pay my workers a salary. I pay them a wage, or I give them a commission, or something like that. So what particular incomes are taxable under the employment income tax, or are there particular incomes that are exempted and say, no, if you get a commission, now that one, we don't tax it?
Because when you look at, I could call it a wage, but when I call it a wage, ideally, how much does it amount to? If it exceeds 235, it is taxable. And secondly, as I call it a wage, at the end of it all, if I'm paying it to somebody, because I would say I'm calling it a wage, I'm looking at how much it amounts to. And is it in a repetitive nature? Because you might have say laborers, and you say I am hiring them maybe for 6 months to do a particular piece of work. So I expect those people on your pay as you earn return for those 6 months. So once the contract ends and the work is done, then ideally they could be off, because they no longer work for you. But in the event that one still works for you and has income that is not exempt, ideally you should withhold pay as you earn.
Okay.
But if it's a commission, that's another arrangement. If you entered into an employment arrangement where it is basically commission. Commission implies that you have to probably execute a particular piece of work, then after it being realized, I pay you a certain percentage of either the income that has come in. Because normally by the time I call it a commission, then that means there's something you have to first execute.
True.
Either if it's collection of maybe areas from a particular entity, then what have you brought on board for me to give you a particular percentage? That is normally a commission. And when it is a commission, ideally, that person is not your employee.
Okay.
No, that person just comes in, works, then pay the commission, they move off. So it is a duty of this person you have paid the commission to file a return, and they file an income tax return.
Can an individual do that? Can I say, me, I earn on commission basis?
Exactly, an individual can do that.
Okay.
Yes, then you file your individual return, because ideally whatever you've earned through the commission is income that you have accrued over that period of time. So you reflect it like any other income.
Okay.
But just because yours comes in on a commission basis. Exactly.
Even when it's not consistent, is it still okay?
Exactly, even when it's not consistent, it's still okay, because it's like any other business. The business is in Kampala. This month you can manage to raise this income. Then the other month it's uncertain.
The other month I make
2. The other you don't make. So we wait for you at the end of it all, because if it's income tax, I would expect 2 returns. One is the provisional return that comes as within 6 months from the beginning of the financial year. That is why you had us reminding clients to file their returns by the 31st of December. Reason the 6 months were elapsing, so that they are not late. We do not push in any penalties to them. So ideally, that is what we expect you to do. So when the year ends, equally, you give us a final return and give us the actual activities that have come in.
I think it would take a very... We are Christians here. I think it would take a very good Christian for me to come and say, you are right. Now I earn commission, but I want to pay tax.
What happens? Yes, it takes a good Christian, but I think it's a discipline. Because tax is the price you pay for civilization in a country. Because if you don't pay this, then who will pay it? And when you go to other countries, the reason why you want them is they sacrifice and pay. The reason why those countries send us soft loans or grants, because when they collect their taxes, they have an excess and say, let us help the less developed in form of this and that. So ideally, if they were not also paying, then who could help the other? Or equally, who could help Uganda? Let me put it in question so that one can understand me. Who could help Uganda? So it's a sacrifice that one makes to say that as I have this small income, let me push in what comes out of it as taxes.
I hear you, Madam Hafsa. But you see, usually, and I think we have talked about this before, where you say, but now, even when I become diligent and say, you know what, and become disciplined and say, you know what, let me push in my taxes, let me push in my returns, how then, usually, as a normal, let me speak as a normal Uganda, I would say, but what will this tax help me? I am not saying the services, doctors are not being paid, that they are on strike. They bring all these issues and say, I would rather not. I would rather now, let me not declare, and as if everyone for himself.
Exactly, that is the mentality we are trying to push out of Ugandans. Because pushing in your return and paying is one, then demanding for a service is another. Let us start with the compliance bit. How compliant are you? Because ideally it's difficult to demand from where you did not contribute.
That's true.
Exactly. It's like you did not contribute to a particular fund, then at retirement you expect the fund to look at you in your old age. It doesn't happen. Exactly. So let us first do our part, play our part, and see that we have done it to our best. Then we can demand government to see that we need value out of the taxes. We have paid taxes, or maybe you, Byron, would say I've paid taxes for the last maybe 5 or 8 years, depending on when you started employment.
Yeah.
But I'm not seeing anything. And the other also has the same sentiment. So I think we should do it in such a way. Let's first do our part, play our part, and see that we push in what has to come in terms of returning, in terms of payment. Then at the end of it, we will put government to task and say we have really done our part, but we are not seeing its worth coming out. We need something to be seen so that we can at least continue doing the same thing we have been doing. Right. I think that should be the story we should be talking about.
All right. One of employment income. Who pays employment income? Only the people who are employed, or even self-employed people?
Only people who are employed are those that pay employment income. Self-employed pay income tax.
They pay income tax.
Exactly.
Not employment.
And by the way, employment income is income that accrues through employment. Okay. But what you pay as a tax is pay as you earn. Okay. It's not employment income. Income is what comes in. But on what comes in is where we derive what you have to pay in terms of pay as you earn. So ideally, it depends of how you source your income. Okay. How you source your income will determine how it is tagged. It will determine how it is computed and why it's computed like that. Okay. So if I'm self-employed, you go put up something, whatever you will try to gather will be income tax. The normal income tax, and it will be income, and then at the end of it all, we expect income tax. Awesome. In the event that your income exceeds 10 million, that is another. For income There's a threshold, exactly. If it doesn't exceed 10, then I don't expect any taxes. But I expect the return. Because the return informs me that, look here, this year I haven't exceeded 10 million. I managed to gather about 8.5 or something. It's the same as in employment. The annual. It's the same as the employment income. The reason why your employer needs to push in this return is to inform us that the workforce you see I have, these numbers fall within these incomes. These fall within these. That is why when I come to compute, those that are liable to pay are these, and they are the ones I withheld from. Okay. Exactly. One
of the things that I know happens is automation.
Yes.
There is a way we have managed, particularly employers, companies, automation, so that they don't need almost every month. I don't know if they need to declare and say, hey, what you've been saying, that these are the people or what, but I think there is some sort of automation, because me every 30th or 29th or 31st, I see it's already deducted. On my account, I already see a salary.
Exactly. So, what happens is, as the world, we are leveraging on technology. As an institution, we are leveraging on technology. So what happens, the pay as you earn, the formula, the calculators are fixed within your system. So what happens here in Family TV, I should imagine the accountant who manages all that, the system is already fixed. But when I say this person is, their gross is about 900, it will auto-compute all the deductions. At the end of it all, within a minute, it will have the net of what you have to take home, what has to be pushed to the bank. Okay. So ideally, it is just fixing the formula there to deduct.
So it's not my, for example, it's not an employee's.
It's not your burden.
It's not my burden.
It's not your burden. Is only to bear what they have to withhold. But to compute and push to URA is for the employer to ensure. And when we are penalizing, we penalize the employer, not the employee.
Not me.
Yes.
Awesome. I was about to ask and say, then how do we compute it? Because does that mean I also have to go and compute and then
No, you don't compute, but what you need to just know is, how do they compute? So that you just have an idea. Exactly, so that when your salary is increased at the end of it all, at least you're aware you've moved from one bracket to the other, and it calls for paying a little more than what you have been paying, just that.
How do we compute?
Let me first look at somebody earning in between 235, an excess of 235, but not exceeding 335. Let me imagine this person is earning 300,000. So I am looking at the excess of 235, which is my threshold, and the excess is 65,000.
65K.
So I apply 10% on that excess of 65. So that's about 6,500. That is a tax I expect. But once you exceed 335, but you don't exceed 410, then I'm charging the excess. Let me imagine your salary is about 400. So the excess of 335 and 400 is still 35.
Still, yeah.
Yes, but here I'm going to charge it at 20%. Let me just confirm here. Here I'm going to just charge it at 20%. Then I add 10,000. When I say 20% of 6,500, it will be about 13,000 plus my 10,000 is about 14. Yes, so that's how it goes on progressing, depending on how much you earn. And maybe what we didn't emphasize is which incomes are exempted, because we'd like Ugandans to know or to understand which incomes are exempted. Income from Uganda Police Force, of the officer, the policeman, income from UPDF, the army, their salary is exempted. Income from the prisons ward, the prisons officer. Income from ISO, an officer from ISO, and an officer from ESO, the external bit of it. Exactly. That is
so security.
Security.
I want to ask why.
Why? One, they are doing a noble cause, and it was of ideal that let them take home the little or the much that the government can give them.
Okay.
That is one.
So that means that security doesn't pay tax at all, or
what happens
that pay tax?
The income they accrue through this employment is exempted from taxation.
Okay.
But if this police officer comes up and saves some money, then puts up a shop, a retail shop, or puts up a rented property, that income is not exempted.
Okay.
I am looking at the direct income sourced from their primary employment, and that is security. But what comes after, when you've put up something secondary, that one is not exempted. We tax it like we tax any other
business.
Exactly.
Our time is fast spent. I'm tempted to ask, what about other people who do noble causes? Why don't we exempt them? Doctors, teachers, why don't we also exempt them?
What happens if it's a doctor and their income and probably the employment is in a government institution? It's like a teacher who is on the government payroll, the public service. There we do not actually come in.
Okay.
But if it's a doctor who comes and puts up a clinic, a hospital, that is private, we come in. If it's a teacher who comes and puts up a school, that is different, we come and tax it. But if this teacher wakes up in the morning and the teacher is teaching in Buganda Road, is teaching in Nakasero, those government aided schools, my pay does not come in. Because ideally by the time the submissions are made for this kind of income, we imagine it has suffered some bit of taxation at whatever level.
Okay.
So whatever comes in here at payment, we imagine everything has been catered for.
Awesome. Ms. Hafsa Seguya there with employment income. I just want her to say last words, but also remind us why we need to pay our taxes, why it's important, as if sensitize us on the importance of us actually committing to pay tax. So, last words and why we need to pay tax.
My last words, first of all, why we need to pay taxes. I would like to urge Ugandans to be encouraged to pay taxes, to live the discipline of paying taxes. It's that price that you have to pay to see a better Uganda. It's that price that you have to pay to see a better school, to see a better hospital, to see a better road. So at least bit by bit, let us try to do what we have to do as citizens. Then the rest we will demand government to see that actually we get the services that we ought to after us meeting our obligation as citizens. And maybe the other, we look at paying taxes, that implies that we want to reduce the debt burden of the government. So that if we source revenue here domestically within the country, then we do not need to go in for maybe those soft loans or grants, or we need to reduce on them, because ideally they are there right now. So we can't say we can't go for them, but let us reduce, because if I increase on what I can collect, that means I will reduce what should I call it? I will reduce the reason as to why we need to go in for that much, because I will avail it locally here, and it will be revenues that are cheap, that do not have strings attached. Then maybe as we move on, we'll see that we move away from the debt bit of it. Because ideally when we look at things like industrialization, that's where we want to go. We want to remove Uganda from the level of being a supermarket, an international supermarket where we bring in from all countries and put here. Why don't we produce from here and supply the rest? Like, because if we can export, then that means the foreign currency bit also will be moving here and there and will be coming in. So maybe what I would like to thank Ugandans, we thank them for paying their taxes, we thank them for being compliant, for supporting the institution, for supporting the government at large, because it is you who comes up with that business. It's you that plans for it, that executes. Then I come for taxes at the end of it all. Would like to thank them for having supported us in 2021, and we hope to do the same in 2022, because this is a continuous duty we have to play, because ideally you need the road. You will not stop needing it. You will need that medical service. You will need maybe probably the drugs. You will not stop needing them. So this is what we need to do so that we can enable. Exactly. Thank you very much.
Thank you so much, Ms. Hafsa Seguya, tax specialist from URA here, encouraging us to pay our taxes. Now, every single Tuesday you need to be here on Family TV so that you find out how to pay your taxes, why you need to pay your taxes, how you can do it, and whatnot. But we are going to join you again same time tomorrow at 7 a.m. here on Church of Uganda Family TV, Morning Glory. Next up is Step Up, where we where we analyze and we talk about young businesses, small businesses, and how they're surviving in January, which is quite a very long month. But we'll see you again tomorrow, same time, same place here on Church of Uganda Family TV. God bless you.
Uganda Matters Seminary Namugongo invites applications for full-time, part-time, and distance learning